coming up on year end. We're getting into 2025's tax season in a couple months.
Yeah.
So I want to first talk about, because there's a lot of changes, there's a lot of stuff happening in the news with the One Big Beautiful Bill Act.
Some of the biggest changes we've had since 2018. Some of the changes are really going to impact a lot of Americans to the benefit.
Which is great.
Yes.
More money back in your pocket is always good.
But that's going to be pretty impactful whenever people are talking about tips, especially in the restaurant industry. If you're a server, if you ever have been, you depend on your tips.
So as we're coming to year end, are there things people can do now to prepare for their tax season and all of these changes that are coming up?
The biggest thing it comes down to whenever you're a tax preparer is making sure you have all the information so that you can do the tax return as accurately and as timely as possible.
Do you think with all these changes that more people are going to be able to itemize on their taxes?
A tax planner is somebody you're talking to before, during, and after.
Welcome back to Watch Your Assets, where we've got your money on our minds. I'm your host, Stephanie Bracken, and joining me today is Geno Lodovico. He is a certified tax preparer for Lodovico and Associates. He's a partner there, and we are going to talk taxes today, Geno. So thank you so much for coming on today.
Thank you for having me.
Absolutely. I'd love to hear a little bit more about your background, where you came from, how Lodovico and Associates kind of got started, and what you're excited about for the future.
Yeah, absolutely. Well, a little bit about my firm first before I talk about myself. It's over 50 years old. It started with my grandfather and my father, originally in Swiss Elm Park, right outside of Pittsburgh. They both had other jobs and went to school at night, and when they both graduated, they started the firm there and grew it from Swissville, then ultimately Forest Hills for almost 30 years, and now in Murraysville is our only location. We used to have two, but now we just have the one. It's located at the beginning of Murraysville, and it's been a great 50 years. A lot of experiences with a lot of different industries. Everyone from the plumber that is just himself in a truck to multi-million-dollar corporations, and a lot of great experience over that time. With that being said, I obviously grew up in the accounting world. That's pretty much everything I knew. And when I graduated from Duquesne, I decided that I would want to continue my career with my father and my grandfather. And one of the rules was you can't start right away. So even though I worked in college for him and got a lot of experience that others might not have, I worked for Federated Investors for a year.
Yeah.
And then I moved to PNC Bank for 3 years. And then I came back to the family firm and been there ever since.
That's awesome.
Yeah.
I have to imagine that based on, your that and then the client base you kind of serve, I have to imagine your business owner experience lends itself well to your client base.
Yeah, definitely. I mean, it's easy to relate to them.
Yeah.
Knowing the struggles of being a business owner and small business owner in this area of Pennsylvania and dealing with people from all over the country. You definitely have different walks of life depending on where you're from and what you do. And knowing those struggles as a business owner kind of helps you deal with their certain situations that they're in.
Yeah, absolutely. So, Geno, I want to talk about, obviously, taxes. We're coming up on year end. We're getting into 2025's tax season in a couple months.
Yeah.
So I want to first talk about, because there's a lot of changes, there's a lot of stuff happening in the news with the One Big Beautiful Bill Act.
Yes.
So I want to start with that. So let's talk a little bit about that and what the changes are to our tax laws that are coming up for tax year 2025. I think people hear the word change and they automatically assume it's bad.
Right.
But that doesn't, everything that I've sort of read, and you can correct me if I'm wrong, everything seems like it's going to be better for the average taxpayer.
Right.
But please shed some light on that and give us your thoughts there.
Yeah, so this tax season is going to definitely be a different one for a lot of people. Some of the biggest changes we've had since 2018, which is pretty exciting. Some of the changes are really going to impact a lot of Americans this year to the benefit, with different deductions, higher deductions, and all around more opportunity to have not only deductions to get more money back in your pocket, but to help with an overall tax strategy for people that otherwise wouldn't have the opportunity to have that.
Yeah.
Some of the bigger ones that I think is going to impact a lot of people is going to be the new SALT change. For those that don't know, the SALT is the state and local taxes that you get to have as part as an itemized deduction on your tax return. That has always been, since 2018, limited to $10,000. And that would mean things like your state income tax withholding on your W-2, your local tax withholding on your W-2. If you made a decent amount of money, we'll say six figures or whatever, that a large part of that $10,000 got eaten up by that. So when people try to write off the real estate taxes and different things like that, they were limited and they got capped, which then hurt them to itemize. This year, that has now changed from $10,000 to $40,000.
That's a big jump.
That's a huge jump.
Yeah.
That's going to help out a lot of people. So those people that were getting maxed out just with their wages, withholding, now they get to bring that to the table, as well as the real estate taxes and other deductions that would be, held as calculating on the standard deduction. That's going to help them actually write off some more money.
Yeah.
So that's a major impact that I think a lot of people are going to benefit from.
Yeah.
Some of the other ones, used to have the standard ones as far as, student loan interest. That's going to always be $2,500 with income limitations. You'll have some things that people lost, but now that's coming back as far as mortgage interest or mortgage insurance premiums. Again, that was something that came away whenever they changed in 2018. Now they're saying, hey, you can take that back and use that as a deduction now, which is going to be great because people that buy their first homes, that's something that is tagged onto their mortgage if they don't put down the 20% necessary. Which is going to be pretty huge. Now, it's not a lot of money, but it all adds up at the end of the day. Some of the other things will be the tips. Everybody is asking about that a lot. And that is going to be something that in 2026, it will be a requirement that employers have on W-2s. It's recommended that they do it for 25, but it's not necessary if they don't want to do it. With that being said, if you're a single filer, you're going to get a $12,500 deduction, okay, for those tips. Now, if you go over $150,000 gross pay, then there's another calculation that's going to eat into that. For a married filing joint taxpayers, they're going to have $25,000 for that.
Yeah.
So that's going to be pretty impactful whenever people are talking about tips, especially in the restaurant industry. As we all know, that's a hard industry, and if you're a server, if you ever have been, you depend on your tips.
Absolutely.
Right.
Yeah.
So that's going to be pretty impactful for them. As well as the overtime. The overtime is not going to get taxed anymore.
Yeah.
Now, they said it's not taxed completely, but there's going to be some implication to that, to some capacity. That's going to be huge for a lot of people, especially union workers and stuff like that. I mean, that's going to be something that's going to really change their tax stance.
Yeah.
With that being said, I mean, those are the small ones that I've had a lot of people tell me about. The elderly credit is going to be very nice.
Is that the Social Security one?
Yeah, so
Okay.
the $6,000 that you're going to get in addition will be a huge thing, especially for the elderly community that we have in Pennsylvania and as well as around the country. I mean, that's always nice, right? So you'll have that, and then some other changes are all going to be things that we've had that are going to make permanent changes. Certain business deductions and credits are going to be available that will be permanent. In one of the big ones that is pretty great is anybody that buys a car in 2025 after December 31st, 2024, so we'll say 1st of January, right?
Yeah.
You get to write off that interest, capped at $10,000. So whoever's buying a car or had bought a car this year, that's a huge thing that's going to go on the return. And you don't need to itemize to do it.
Yeah. Okay.
So that's something that's going to be great. Another great thing is going to be people are allowed to take any type of charitable contribution that they take out of a qualified plan, meaning an IRA, not a 401k, they can take that and have that as a above the line deduction for them. So they don't need to itemize to use it, but it's something that they can do, and it's a huge benefit to them if they so choose to do it. And you don't get penalized to take money out or anything like that. So for those things. So these like little changes can be a very big impact on a tax return.
Yeah.
And now there's probably 20 more that we could probably go through line by line, but the benefit of the average American is really going to see the impact when they file their tax return this year.
So do you anticipate people getting larger refunds than they've seen in the past because of this?
I do.
Okay.
I think it's going to be a 50-50 situation. Naturally, the itemized deduction or standard deduction is going up as it does every year. So, you have a less likelihood of itemizing because it keeps increasing. I mean, when I started doing this for married filing joint, it was $12,000. Now it's $30,000. So, it's a massive change. But that, normal married filing joint couple that is filing a tax return, that they're not necessarily high net worth or high income driven, they might have a big opportunity to itemize because they have a huge mortgage, because interest rates for mortgages are high, the real estate taxes that go with it, their wage withholdings and everything like that. So if you can, then yes, I think it's going to impact your return in a huge positive way.
Yeah.
If you can't, then you'll pretty much be right where you are normally.
Okay.
I don't really see people going down anything.
Which is great.
Yes.
More money back in your pocket is always good.
Exactly.
Yeah.
Exactly. I think it's going to be a great tax season for that. And that's what I'm excited about the most, is just really seeing these new changes that are going into effect or have gone into effect, and how it's going to benefit people. I mean, there's no lying about it. Everybody doesn't like doing taxes,
of course,
right? And I'm not going to lie, it's not the funnest profession in the world, but at the same point, it's necessary.
Absolutely.
And I always say, you make the money, you pay the piper, right? Yeah. So we want it to work as best as it can in the system, and I do think that these changes will definitely be positive.
That's fantastic. So as we're coming to year end, are there things people can do now to prepare for their tax season and all of these changes that are coming up? Is there documents they can gather? Is there just information they can have ready for their meeting with their tax preparer?
Yeah, so that's a really great question, because that's the biggest thing it comes down to whenever you're a tax preparer, is making sure you have all the information so that you can do the tax return as accurately and as timely as possible.
Yeah.
So as an individual comes in to meet with their preparers, they need to have all the 1099s, the W-2s, investment information, IRA contributions, HSA contributions, education, if that's tuition or the interest. Anything that you see that says tax information on it, put it in an envelope and give it to your tax provider. If you give them too much information, that's okay. You're just going to get it back.
Right.
But the biggest thing is going through and seeing like, hey, that change sounds familiar that I've experienced over 2025. I'm just going to go put some information in about that.
Yeah.
I mean, for a long time, there was a really big push for energy credits. Well, those energy credits are actually going to go away. A lot of them are going to start phasing out because Trump now is going to concentrate more on fossil fuels. So that's something that people need to remind themselves of. Hey, wait, I put in some windows, even though it's $1,000 lifetime deduction or credit, it's still something that can impact your tax return, okay? And it's another thing that's very silly that you would think everybody would have in the front of their mind. If you have another child, right, we got to make sure that we put them on the tax return.
Yeah.
You would be very surprised how many times people forget to give us the information of a new baby. That's fantastic that you had that happen in your life, but you got to make sure that we have the Social Security number, the birth date, the full legal name, those type of things, because this year the child tax credit went from $2,000 to $2,200. So therefore, $2,200 is not a small amount of money in the grand scheme of things. So we want to make sure that you're getting that on the tax return.
Yeah.
So all these little things that might seem very minimal can make massive impacts on the returns. So, but yeah, I mean, like I said, getting back to the question of making sure you have your information, if you ever question it, just bring it with you. So that's the rule of thumb.
Yeah.
And just be prepared. If you forget something, your tax preparer should let you know.
Yeah.
So, you want to make sure you get it back to them as quickly as possible so that they can do their job and get it done for you.
Yeah, that's great. So you mentioned, I heard you say deductions and credits. Can you talk about the difference between a tax deduction and a tax credit?
Yeah, so the biggest thing is the deduction is taken as a deduction. Credit is going to be something that there is, I'm trying to think the best way to explain this, because it's very confusing to answer your question.
Yeah.
Credit is something that you don't get a return on. So meaning if I take a credit, like that, we'll take the child tax credit, okay? It's a credit that you get to use on your tax return to limit your tax liability, okay? But it's not refundable.
Yeah.
Okay. Deduction is you have a tax liability and we're decreasing that tax liability from that. And some of them are dollar for dollar, some of them are not. And some of them all work together to, especially on the deduction side or the itemized deduction side. But the deductions are more so used to get that, to reduce your liability so you don't pay taxes.
Right.
And then the credits are, okay, hey, you fall into this bucket. We're going to decrease your tax liability, but it's not going to be a dollar for dollar refundable credit.
Okay. Yeah.
Does that make sense?
Yeah.
Okay.
So deduction is you reduce your taxable income. Credit is you reduce your tax liability. Is that how I'm thinking about that, right? Okay.
Yeah.
Great. Thank you for clarifying that.
It's just best to ask your tax planner or tax specialist, we'll call them. How does this impact me?
Yeah.
And like I said, it's a lot easier to understand that versus, hey, which one works which way and what gets calculated and stuff like that. Because I can sit here and tell you, I know exactly which one's going to do what to each return, but the reality of things is there's way too much information for somebody to know all of that, right then and there.
Yeah.
That's why we have these great systems that do things that help us whenever we're preparing tax returns and putting tax returns in. That's what they're there for. And a new requirement for the tax returns is you can't send in paper copies anymore. You have to have everything sent in electronically filed, which is going to change a lot for people that are older or write out their tax returns. You can't do it anymore.
Wow.
And if you have to make a payment, you have to do everything online now. You can't send in paper checks. Are there exceptions? Sure. But to the main point is you have to file everything electronically.
Yeah.
And these systems are so advanced now. I mean, everybody talks about AI, and yes, it's a thing of the future, and it's starting to be here now, of course. The government is no different, right? They want to keep advancing and finding easier ways and quicker ways to get money back to you and get money to them. So naturally, the times are changing to support that. And this is going to be the first year. Well, actually, this past year has been the first time where they're like, hey, I don't want any more checks. I want you to go online and to irs.gov and to the states and to the locals and pay everything online. And it's actually easier for the taxpayer, too, because if there's ever an issue about, hey, I didn't make that payment and I'm getting a notice saying that I didn't pay something, well, you can go look and see pretty relatively easily that, hey, I have an electronic payment that I made, because it happens.
Yep.
So that's something definitely to keep in mind as this tax season rolls around. Those old school 1040s that everybody's filling out or having printed out, that's great, but you have to electronically file it.
Yeah.
So, and the 1040 is going to be completely different this year.
Of
it's going
course.
to look different. It's extremely complicated.
Yeah.
And being that, that I've done this for as long as I have, it's even kind of an eye-opener to me how things are going to change and what the forms look like. And another great thing about our government is the forms aren't even finalized until February 1st.
Oh my.
So even though they open up filing normally the last week of January, there's a possibility that 10 of the 20 forms that you need to use aren't even finalized. So it's something people need to definitely be aware of, and something that people need to pay attention to.
Yeah.
For sure.
Do you think with all these changes that more people are going to be able to itemize on their taxes? Because I know for a long time it was the standard deduction was a lot larger than itemized deductions, and it just didn't make sense to itemize. Do you think that's going to change with all these extra deductions you can take?
It's hard to say.
Yeah.
I would love to say yes, but the reality of things is everybody's tax situation is different. So somebody that we would never have thought that they would be able to itemize is going to be able to. The person that we thought was going to be able to itemize, and they're not able to. It just really depends on the individual or the taxpayer, is if they're going to do it or not. I mean, who knows? I mean, the standard deduction being as high as it is now, it still might be unattainable.
Yeah.
So, but there's so many factors now that could change that answer. I mean, people that are buying houses right now with the mortgage rates being as high as they are, they're going to have a lot of interest that they can put on there. So somebody might have $30,000 in interest, which is not going to be uncommon with those type of rates, that it will put them over right there.
Yeah.
So it's a really hard question to answer with certainty.
Yeah, makes sense. So I think there's a little bit of a difference between tax planning and just preparing your taxes. Do you, why do you think people tend to only focus on the preparation side? Is it just the situation isn't always complex enough to require planning? Or, is there something else that's at play that causes people to just focus on the preparation of their taxes and not the planning of their taxes?
Yeah, so that's a great question. It's actually, I'll use one of my dad's sayings. A tax planner is somebody you're talking to before, during, and after, okay? Which makes complete sense. When you're tax planning, and everybody should be doing tax planning, right? Every taxpayer that does this, has a very simple return to a very complex one, because you want to make sure that you maximize all the available deductions, credits, tax law changes, availability that you have to have as much money as you can not be paid toward the government, okay? So the tax planning side of that is, you're going in, you're looking at all these aspects of what you have on your return, what's available to you. A tax preparer is just taking the information, putting it onto a tax return, and filing a return. So they're two separate things completely, obviously dealing with tax, but the tax planning, in my opinion, is more important so that you can maximize what you can do as a tax preparer in order to benefit the client.
Yeah, makes sense. And I think from our perspective too, the tax planning is a huge part of someone's entire overall financial plan. Correct. We look at different areas that come into play with planning, and obviously tax planning is going to be a huge part of it, because we want to minimize taxes where we can and think of strategies that fit into somebody's situation, like you mentioned, that are relevant to them, but also don't screw up the other things that are going on with their plan, with their investments, with their insurance coverages, things like that. But we want to be mindful of all of these things so that it all works together.
Right.
Yeah.
Yeah, I mean, that's a crucial piece of the puzzle,
Yeah.
Right? Especially dealing with investments and stuff like that. It's really important to not only have the financial planners or wealth managers or whomever that's dealing with your money to be on the same page as them, right? You don't want to get into a situation where, oh my gosh, I owe the government so much money because I did so well in the investment side of things.
Yep.
Where having the communication with those people that are dealing with that money could be like, hey, let's look at this opportunity as a tax benefit where you can still invest and make the money you're making, but it might be in a more tax savvy way.
Yeah.
That's going to benefit you, maybe not this year, but in the future,
Yeah.
right? So that's a big part of having investments and tax obligations, right? And great about the relationship that Lodovico and Associates has with YTS is, we're able to work hand in hand with the advisors that are trying to make as much money as possible for the clients, and we're trying to save them as much money as we can on the tax side of that.
Yeah, absolutely.
So I think it's really crucial for anybody.
Yeah. And one of the strategies we talk about with our clients to help, mitigate that a little bit is tax loss harvesting with capital gains and being able to carry forward a little bit of your capital losses,
Yes.
to offset gains, things like that. But are there other strategies that you typically see that could be relevant to someone's situation? Roth conversions might be one of those things, something with estate planning, anything like that. Do you normally recommend things like that as we're looking toward the end of the year?
Absolutely. Roth conversions are a huge piece that, if it's available to you and can benefit you, it's something that is a great tax tool that I don't feel a lot of people take advantage of that have the opportunity to.
Yeah.
And yes, it's complex, and as I'm sure you know, that it's a lot of work to kind of figure out where the benefit is.
Yeah.
But I will tell you, it is a huge tax vehicle for individuals that can do it.
Yeah.
And then as well as, making sure that you're doing the right things for estate planning to support later down the road, especially, with children, loved ones, whatever. Like, you want to make sure that everything you've worked for your whole entire life is, one, taken care of, two, those loved ones are taken care of, and you're not giving them a tax burden at the end of the day.
Yeah.
Too many times I've seen people, lose a loved one and then have a mess to have to worry about. And yes, they're getting money, but at the same point, they just lost a loved one. So it's an already difficult situation, and the timing of everything couldn't be worse.
Yeah.
Right. And if things aren't figured out, it makes that difficult to deal with even more.
Yeah.
So estate planning, I think, is also a very big thing that everyone should definitely, if it's not on your radar, it should be.
Absolutely.
And they should take the steps and get it taken care of well ahead of time.
Yes. 100%. I had a situation with a client who she passed away, and her significant other, who they were not married, was her sole beneficiary. And because they weren't married, now he's having to worry about inheritance tax and all of the 10-year rule with the beneficiary IRAs and these other things that could have been avoided had they gotten married. Even if it was on her deathbed, just signing that piece of paper to be legally married could have avoided some of those. So yeah, again, back to the whole picture, we talk about that a lot with people who live together but aren't married. It might make more sense to just, like, it's a financial decision to get married at some point, and it's the single filer brackets are very unfavorable compared to married filing jointly. So you, I assume, are getting a little bit of a tax benefit by being married. So again, it kind of is a financial decision at some point. Obviously, you love them, but there's the financial aspects of it as well.
Yeah, and we live in Pennsylvania that has death tax or inheritance tax. We are definitely in the minority that has it. Not a lot of states do have it. I think there's 6 or 7. I could be wrong on that, so don't quote me. But with that here in Pennsylvania, there's lineal rates, which, a spouse is 0, children 4.5, and so forth, capped at 15 for anybody. But to the point is, this is an obligation that you have to do. People don't know about it, right? And then all of a sudden you're going to get a state letter going to an executor or something, or a loved one, or a descendant of somebody that passed away, and then they're going to say, hey, you owe us this much money. And it's not like you can be like, well, they're not here anymore, so how do we pay you?
Right.
That's not how it works, because that money that's sitting in your bank account, or now your new investment account, or in a house that you bought with that money, well, really, part of that's not yours, and it's the state's. So I think people need to educate themselves on, those type of things, and that comes with the estate planning aspect of it.
Sure does.
It's extremely important that people forget about, and simple as having a will. I know that a lot of younger people don't even have a will, and to some aspect, I understand. But, I learned when I went to a marriage class with my wife, the first thing that I was told, or we were told, was that as soon as you get married, you need to have a will. And, that was such a crucial piece of information that at the time I thought was silly. But I'm very glad that I did it, because now I have children. My wife and I have been married for quite some time, and we have that conversation, what if something happens? And you never want something to happen, but the reality of things is we never know what tomorrow is going to bring, right? And God forbid something happens to myself or her or our children, it's going to be taken care of on a legal aspect of things with a will.
Yeah.
Again, all part of the estate planning process that
Yeah.
I think everybody needs to definitely pay attention to.
Yeah, absolutely. And I think that's where the life insurance conversation comes in as well.
Yes.
And that's something that we evaluate for people is based on your family dynamic, based on your income, your debt obligations, things like that. Does a life insurance policy make sense? If you don't have any life insurance coverage and you passed away, what would that mean for the people who are left behind? So it all ties back together, and that's an important piece of the conversation as well. It's not death is not something that anybody wants to talk about. Like it's
Right.
just we don't want to think about it, so we put it off and we don't plan for it. But it's one of those things that you have to plan for the unexpected.
Yes.
And unfortunately, death and taxes, that's it's only two certainties in life,
Only
right?
two certain things.
So that it makes sense to have to plan for taxes and your passing.
Yes.
So you want to, like you said, make sure that everybody's taken care of, that whatever obligations you have aren't going to be this huge problem to someone.
Absolutely.
So thank you for all that.
I couldn't agree more.
Yeah. We've talked about federal tax changes, but is there anything happening on the state level that people should keep in mind?
Yeah, so obviously the one I just spoke about is going to be pretty impactful to some extent. But other than that, there's small changes. Nothing that I feel is something that we need to shed too much light on. But again, it's December 1st, so I might be telling you that there's things in the works that aren't going to get finalized until tomorrow.
Yeah.
And it's going to be broadcasted out to everybody. There's still time for it. So to answer that question and say yes, there's this, yes, there's that. I can't until they decide essentially what they're doing.
Right. Which we know that can be a little bit of a sit and wait game
Yes.
with the federal government. So
Yes, federal,
state,
state, all the same.
Yeah.
The only consistent one, most consistent as far as not too many changes, will definitely be the local.
Okay.
That's pretty much straightforward. Now people do tend to forget about things with the local, but which could really come back and bite them. There's no statute of limitations for the local, so they can go back to the beginning of time if they wanted to.
Oh, wow.
They typically don't, but to the major point here is they can look back forever, and people forget to do a local tax return. Some people don't have to do one, depending on age and type of income and everything like that. Some people don't have to do a PA return, depending on their income. But at the same point, those small pieces is what a tax planner and a tax preparer need to communicate with their client as to what circumstance they find themselves in and what they need to do. And always remember, if you have children and they're making money and everything like that, make sure you are paying attention to what obligation they have to file.
Yeah.
There's income thresholds, there's different things, as far as how they're getting compensation or how they're getting income, that's going to determine if they're going to file a tax return or not. If they're going to, claim themselves, or if you're going to claim them and do a family link. There's so many aspects to that that it is quite confusing, and you really need to sit down with a professional and discuss that type of situation, because it's going to make it complex,
Yeah.
right? It's not as simple as, oh, hey, my kid did this, and they have investments, and I put away money for them, and now they're making money. They have dividends and income from other sources, and oh wait, they decided to deliver pizzas this year. Like, that's great that they're doing that and that you invested for them and they're making money, but you got to file a tax return now,
Right.
and you got to make sure we're doing it correctly, dependent upon how much income they have. So that's a major thing that taxpayers definitely need to pay attention to every tax season, not just this one, every tax season.
Yeah.
So
Now, let's talk about maybe the difference between a 529 plan and a UTMA and how those two things can affect the child's income and versus the parents.
yeah. So the 529 plan for us in Pennsylvania, it's just going to be a state deduction. And a lot of things have changed with that over the past couple years, which I'm sure you know. Um, the biggest one is they don't have to be your child to put into a 529 plan. A lot of people do get confused about that. The only thing you need to do that is I can give to little Johnny that lives down the street if I wanted to. And I can take that on my tax return as a contribution to a 529 plan that I get to write off on Pennsylvania. Okay? You just need their full legal name, Social Security, and the birth date. Okay? But there's a limitation to it, and forgive me, I don't know what it is. It's a lot of money, more so than I would ever put into my kids, or whatever. But at the same point, it is a good state tax vehicle that you can use. And that money is to be used for education, college, trade schools, I can't remember.
Cosmetology.
Thank you. Sorry. Had a little tongue tie there. But you can use it for those types of schools. And there's even other schools that are not like credited universities or secondary education that you can use them for as well. They just have to follow certain guidelines and do certain forms. For instance, we had a client that trained dogs to be service animals. They went to a special school to learn how to do that, and it was not a credited university or secondary education, but ultimately it did follow the guidelines and was able to use her 529 plan to pay for that school. So these type of things for the 529 plan are really important.
Yeah. Well, Geno, thank you so much for coming on today. I hope that you had fun with this episode.
I did. That was great. Thank you for having me.
Absolutely, yeah. If they want more information about Lodovico and Associates, about you, about your practice, where can they find you?
So we're located in Murraysville, Pennsylvania. It's about 25 minutes outside of Pittsburgh. You can find us online at lodovicotaxpros.com, and you can reach out via the website, email, whatever. We're there, 6 days a week, starting February 1st.
Great. Well, thank you again. If you enjoyed today's episode, be sure to give us a like, follow us on all social media platforms. It is Watch Your Assets. Don't wait until April 14th to do your taxes. Be prepared, be proactive, and we will see you on the next one.